Hey everyone, welcome back to the channel. Today we are tackling one of the most common questions in personal finance, which is what's the difference between a Roth IRA and a traditional IRA, and which one should you choose? If you've ever googled this and left more confused than when you started, you're not alone. But don't worry, by the end of this video you will understand exactly how they work, how they are different, and how to decide which one fits your goals best. Let's start with the basics. IRA stands for Individual Retirement Account. It's a type of account that helps you save and invest for retirement, but with some major tax benefits. That's the key thing about IRAs. They are not investments themselves. You open an IRA and then you fill this with investments like ETFs, index funds, or stocks. Now, there are two main types of IRAs, which is traditional or Roth. They both help you grow your money for the future, but the difference comes down to when you pay taxes. With a traditional IRA, you pay taxes later. With a Roth IRA, you pay taxes now. That's really the core difference, but let's break it down so it actually makes sense in real life. Let's start with a traditional IRA. When you contribute money to a traditional IRA, you're usually allowed to deduct that amount from your taxable income for the year. For example, you made $50,000 and you put $6,000 into a traditional IRA. The IRS only taxes you like you made $44,000. That means you get a tax break right now, but here's the catch: you have to pay taxes later when you retire and start putting that money out. Every dollar you withdraw in retirement gets taxed as regular income. So you're basically saying, I will skip taxes today and deal with them in the future. Now with a Roth IRA, it's the opposite. You don't get a tax break when you contribute. You pay your regular taxes on your income like normal, but the magic happens later. When you retire, every single dollar you pull out is tax-free. That includes your contributions and all the growth. For example, if you put in $6,000 today and it grows to $60,000 over the years, you get to take out all $60,000 completely tax-free. No income tax, no capital gains tax, nothing. So which one is better? That depends on one big question. Do you think your tax rate will be higher now or in retirement? If you're young, early in your career, or in a low tax bracket right now, a Roth IRA usually makes more sense. You pay the taxes while they are cheap and then let your money grow tax-free for decades. On the other hand, if you're in a higher tax bracket today and you expect to be in a lower one when you retire, the traditional IRA might be the better option for you. You get the tax break now and pay less tax later. Let's say you're 22 years old and making $35,000 a year. You're probably in a low tax bracket. So paying taxes now, locking that Roth IRA and letting it grow tax-free is an amazing deal. But if you're 45 making six figures and you expect to have a smaller income in retirement, deferring taxes with a traditional IRA might make more sense for you. There are also some key rules you need to know. For 2025, the annual contribution limit is $7,000 if you're under 50 and $8,000 if you're over 50. That applies for both Roth and traditional IRAs combined, so you can put $7,000 into each. It's $7,000 total. Another big difference is how withdrawals work. With a traditional IRA, you are required to start taking money out once you hit age 73. These are called required minimum distributions or RMDs. You don't get to let it sit forever. The IRS wants their tax money eventually. With a Roth IRA, there are no RMDs during your lifetime. You could leave the money in there for your entire life and even pass it on to your family members. But here's where people get tripped up. The Roth IRA has income limits. That means if you make too much money, you are not allowed to contribute directly. For 2025, if you're single and make more than around $161,000, your ability to contribute phases out. For married couples, it phases out to around $240,000 combined income. Traditional IRAs don't have income limits for contributions, but if you or your spouse has a retirement plan at work, your deductions might be limited. Now you might be thinking, okay, but can I take the money out early if I need it? The answer depends which IRA you have. With a traditional IRA, early withdrawals before age 59.5 are taxed and hit with a 10% penalty, unless you qualify for a special exception like buying your first home or certain medical expenses. With a Roth IRA, you can actually take out your contributions at any time, taxed and penalty free. So if you put in $5,000 and it grows to $8,000, you can take out your original $5,000 whenever you want. You just can't touch the $3,000 of growth without taxes and penalties until you hit the age limit. The flexibility makes the Roth IRA really attractive for younger investors. It acts like a retirement account but also gives you some access to your money if you really need it without being punished. That said, you should still treat it like a long-term investment. Retirement money is best left untouched so compound interest can do its thing. So let's recap. Roth IRA, you pay taxes now, withdraw tax-free later, no RMDs, some income limits, flexible contributions. Traditional IRA, you skip taxes now, pay taxes later, have RMDs at 73 and no income limits for contributions but possibly limits on deductions. So which one should you choose? If you're young in a low tax bracket and just getting started, go with a Roth IRA. It's simple, flexible, and sets you up for decades of tax-free growth. If you're older, earning more, and want to reduce your taxable income today, a traditional IRA can be a powerful tool. In some cases, people even use both over time, starting with a Roth in their early years and shifting towards a traditional IRA when their income grows. With that being said, thanks for watching. If you got value from this breakdown, hit the like button and subscribe for more content just like this. And drop a comment below. Are you using a Roth, a traditional, or both? Remember, the earlier you start, the easier it gets. I will see you in the next one.